Global financial markets have perked up as concerns about the new virus strain are ebbing away. For a start, investors signed with relief, having digested the news that the new Omicron variant appears to be milder than previous strains. Besides, traders are anticipating the crucial report of the week, the US inflation data for November. Let's discuss this and other events on InstaForex TV channel. Report to shed light on global economic conditions will be trade balance data from Germany, one of the world's largest export-focused countries. Therefore, the dynamics of its trade balance could be viewed as a barometer of economic health, not only in Europe. Apparently, investors will be pleased about positive changes. Both imports and exports are projected to expand in October, so it will arouse hopes that consumer activity is getting back on track around the world. The euro-dollar pair will grow in response. As usual on Thursday, in the early New York trade, investors monitor weekly updates on US jobless claims. The consensus suggested that the number of first-time claims for unemployment insurance was 225,000. Last week, it's the average reading recorded over the pre-pandemic period. This steady weekly average confirms a confident recovery in the US labor market. Market participants certainly cheer the steady downtrend in the number of continued unemployment claims. In this context, we suppose that dollar-denominated assets will resume growth. On Friday, December 10, the European session is going to be turbulent ahead of the publication of the US inflation data. Traders will get to know important metrics from the UK, GDP and industrial production for October. The British economy is expected to ease the pace of growth 2.4% in months and to 4.9% in annual terms. On the plus side, perhaps the UK industry entered the expansion stage. Industrial output could increase to 0.1% from a month ago. An annual rate could stand up at 2.2%. All in all, experts still record production rates way below pre-crisis ones. Nevertheless, positive changes might invite the sterling bulls back to the market. In the run-up to the US inflation data, market sentiment will change in favor of the US dollar. Experts warn that the US CPI carried on with the acceleration to an alarming rate of 6.7% year-on-year. It goes without saying that the Federal Reserve will have to raise the official funds rate urgently under such overheated economic conditions. Fed Chairman Jerome Powell has already sent a message about earlier than expected monetary tightening. The policymaker also stated that the central bank no more considers high inflation transitory. Meanwhile, traders believe that the US Fed will resort to the first rate hike at the nearest policy meeting scheduled for December 15. And we will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and to follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.